Hello traders, the title of this video is how to combine CCI trading and top-down trading like a pro. Alright, so in fact I will change the title of the video. I'll put how to combine the CCI indicator and top-down trading. Alright, that will be a better title. Okay, how to combine a CCI indicator and top-down trading like a pro. Alright, so I have on my chart here the CCI period 14. Alright, this is a practical CCI trading, and you can see that the CCI period 14 is well overbought because it's above the level of 200 that a lot of people consider as overbought. I talked about this before. Okay, in fact, when the CCI is above 100 or 200, is telling us that the bullish momentum is very, very strong. So be careful if you want to sell. So here we are, I'm talking about the CCI is overbought, and we want to apply a top-down trading method to trade it. So the reason why I keep talking about top-down trading method, multiple time frame trading method, different time frame trading method, and traders sometimes get upset with me, think that, Joe, you said it 100 times, and why you keep saying that all the time? Why are you saying the same thing? It's just because it's so important, and I'm speaking sometimes to new traders. All right. So the CCI is overbought. You can see here in this section here. Look at this section here. All right. So we are talking about CCI was overbought, all right, here, and the price was going up all this time nicely. All right. But here again, it's overbought again. Now, to avoid the mistake that traders are making here, those who are trying to sell the CCI instead of trading the price above was in a rising channel. It's a violation of a market pattern, or if one is selling at this, one is trying to violate the market pattern. All right. So here we have again, the CCI is overbought. Now it's pulling back, but the price is in a rising channel again here. But in this scenario, we can see that there is a bit of divergence, as it was here again. You can see that there was a divergence. The CCI is going down, and the price was going up. But you can't sell until the price come out of that channel. But here, I want to mention something very important. I know other things about the CCI. That's what selected this example. All right. So suppose you are here, and you see the CCI say, oh, it was overbought before, now it's overbought again. So I will take the second overbought. All right. So too many confirmation has been overbought. Now again it's overbought. It's the second time. I'll give this one a chance. Okay. But if you just go like other traders were doing here, you see this was going on here. You see the shadow here. People are trying to sell it. And sometimes I get upset about that. Not because I hate those traders. It's their money. They can do whatever they like. It's just old-fashioned way of trading, but we have to put up with all this. What one can do, all right, CCI is well overbought. You can see if we place a vertical line at the point where the CCI was overbought was here. But look, price continue to go up. So, in order to sell, in fact, when the CCI is overbought, we will prefer the price to do something very simple that the price itself doing all the time. Break the low, that common central line, retest or form a lower high, okay, below it. And then we implement a top-down trading method to sell it. If it does not happen, we don't sell, like it was here. See, overbought, price was still above the bullish trend line, and here it came out and displayed the first lower high. Now your overbought is confirmed by the price right here. So here, sometimes you see here, this section here, you'll be thinking, oh George, it would be nicer to sell it here and bring it out like this. So you feel so powerful, isn't it? You'll feel so powerful that you catch the early stage of the reversal. In order to do that, you must use a different time frame trading method. So this is about how to combine the CCI indicator and the top-down trading method or different time frame trading method. So a practical example. So We have a monthly chart. We know the drill for top-down trading method, swing trading, monthly chart. So what we can do is not ready here, is to wait. At least you see here, we are talking about candlestick pattern. So CCI is overbought. We say, all right. Now, we switch our attention to the prime. At least if we have a bearish candlestick pattern, that will give us a bit of confidence to attempt to sell that financial instrument, yes or no? So now this candlestick bar, personal, the way I see it, now you see that is this an exhaustion candlestick bar. Have I already posted a video? I think I did. The powerful candlestick bar. One should know. Yeah, I think I've already powerful candlestick pattern. One should know. Is that the one about the exhaustion candlestick bar or something else? Anyway, I recorded a video about that. I don't know exactly the title now. All right, move on. So I talk about the exhaustion candlestick bar. So probably going up first. This is probably going up first, and then you have a bullish candlestick bar, and sometimes the primary form, all right, a consolidation within a range of that long candlestick bar. We don't want the video to be too long, so I can only refer you to our recent video about candlestick bar and the following one that I'll be posting, okay, in the following days, all right. Or check the playlist about candlestick pattern or candlestick trading by Daypo Traders YouTube channel. So personally, I will wait for this candlestick bar to close, which means at the end of this month of April 2017. So I will give it another 7 days. So end of next week, probably I'll come back when this candlestick bar is closed, and I'll say, all right, this is a long candlestick bar, but look, price did not display new high. Some people start selling. So if that candlestick bar close bearish as it is now, it stays like this, I will say to myself, all right, this is looking a little bit bearish now. You see, it's a tall, nice, gorgeous bullish candlestick bar. Why we have now a bearish candlestick bar hanging in the body of that bullish candlestick bar. It looks bearish. Then I will apply a top-down trading method. So the point I'm saying, one can look when the CCI is well overbought at 200, look for candlestick pattern, look for weaknesses in the price action, wait for the price to confirm it. So one of the signs can be a candlestick pattern or price coming out of the rising channel, forming the first lower high. But if you want to sell at the end, you see the same scenario we have here. You see here, again, you see, watch carefully. Tall candlestick bar, and you have that dark candlestick bar hanging in the range of it on weight. It's a very bearish. All right, you see, this is exactly what is being formed here. That's why I say, if this candlestick bar is now closed bearish, that will form a bearish candlestick bar. Those two candlestick bar will form a bearish candlestick bar, as it was in this session. These two candlestick bar was bearish candlestick pattern. Now from there, we can implement a top-down trading method. So talking about combining the CCI indicator on the top-down trading method, we see the CCI is overbought. We don't just sell like people are doing now. We can validate that overbought, looking at the price structure, the price action, for instance, candlestick pattern coming out of the rising channel, exhibiting the first lower high. That would be a bit of confirmation of our overbought, because if it's overbought, you start coming out of the rising channel. Okay, so after that, we implement the top-down trading method. CCI is overbought. Now we have a bit of indication that there is a bit of weakness, talking about the candlestick pattern. Now we implement a top-down trading method. So once this candlestick bar here, this one here, form a bearish candlestick pattern or is closed, now we implement. So this will constitute the bearish trading setup. CCI overbought, bearish candlestick bar, we have now a bearish trading setup. But we don't just sell because of that. Okay. Now we go to the daily chart. I'm going now to the daily chart. And I want to show you how we'll implement. So on the daily chart, we are looking again for a reason to sell. So on the monthly chart, we see weaknesses, all right, a bit of confirmation. Now we go to the signal time frame. We are again looking carefully. Is it telling us on the daily chart, which is the signal time frame for the monthly chart, to sell? That's the question. So now we look on the daily chart. Here we are. So looking at that stock. So I said to you, I'll wait for that monthly candlestick bar to close. You see that the price, okay, if I connect this point and this one, connect this point and this one, okay, how about that? I choose one point here, just this one, and draw a line that is parallel to this one. So now we are on the daily chart. Is it telling us now to sell? Correct? So we are somewhere here. We are somewhere here on the monthly chart. See here, many days, price going down. Right? So this month of April, you see here, we are in April now. From here. So price rally up, you see this price find a resistance on the edge of this trend line. Same place. And the third time is mine. Remember, people will sell here. Find a resistance here, find a resistance here. Third time, people will sell here. So the reason why you can see in April people start selling is because the third time is touching the same trend line and finding a resistance. Not only that, here it is. So after you see on the daily chart now, here it is. This candlestick bar close below that common center line. That's the signal to sell. That's the signal to sell. But you will not sell because the CCI is overbought. You are selling because the price closes on the daily chart below that, okay, common center line. But you are not selling yet because of the signal. Now you will go to the entry time frame, which is the hourly time frame. So some trader may say, Joe, you're expecting me to enter the trade on the hourly time frame. If you don't like the hourly time frame, use the hourly time frame as a trading setup. So you can break it down again and go all the way to the 3-minute time frame to enter the trade after this daily candlestick bar is closed on the daily chart. So on the daily chart, you want something else you can do. You see, after that candlestick bar is closed, highlight the high, the low of that daily candlestick bar, the small one, okay, and also the median line. Best place to sell is near the median line. This candlestick bar, try to, somewhere there, somewhere in that zone, okay. The best place to sell near the median line. So you want a rally into the median line of that bearish candlestick bar, and then, all right, on the entry time frame, which is the hourly time frame. So you draw the high, the low, and the median line of that bearish candlestick bar, and then you switch to your, okay, hold on please, your hourly time frame. So what we are talking about now is more practical for swing traders, but also for day traders, okay. So you can go all the way from there to your 5-minute time frame, to your 10-minute time frame. So highlighting the high, the low, and the median line of that candlestick bar that closes below the common center line, and I'm going to call out into red, okay, the median line of that small candlestick bar, and then from there, after that daily candlestick bar is closed, we go to the hourly time frame. Here we are, see, on the hourly time frame. All right. Okay, on the hourly time frame, we have you see here, price finally break below that, you see. So this is it. You see a bit of move on the hourly time frame to retest the moving average 14, and also that red line, you see here, it dropped down, and then am I in April? Beginning of April, you see here, beginning of April. Right. And then he went up to retest it. You see this kind of here, pew, they sold it there. That's why they sold it, exactly on the dot. A lot of traders enter the trade here. All right. The greedy, all right, traders sold it at the top here. You can't compete with those market participants. They sold it here and they dump it. They are the first sellers. More conservative technical traders join them here on the edge of the moving 14 and also of the red line. So you may say, Joe, that's too difficult for me. But again, you can look, apart from that, you can also look for bearish chart pattern where you want to sell. So on the hourly time frame, can you see a bearish chart pattern now? Yes, there is a head and shoulder. This is the big head here. And this is, okay, the left hand side shoulder. Wait for this one, kaput. Then again, drop it down. But you can see that because if you sell here, you have to place your stop loss here or somewhere up here. So you may think, oh, I can't afford that. So you'll be thinking it will be better to sell at the early stage somewhere near the median line of that daily candlestick bar, which is the red line, where trader did sell it. All right. So it's not sufficient for the CCI to be overbought before one will sell. Where the CCI is overbought or reaching the level of 200, in fact, it's telling that the bullish momentum is very strong. One should be very careful. One should have a good reason before one will sell. So we will look for weaknesses. Right? This is what we are talking about now. And now, on a monthly chart, if, for instance, this April is closed bearishly, right, that will give a lot of market participants a bit of confidence that things are not improving at this juncture. They will try to sell. But as I show you now, as this candlestick bar is not yet closed, we go to the daily chart to investigate what we are looking for on the signal time frame. We are looking for valid reason to sell. So try to find a resistance here, and a resistance here. Third time we find a resistance, common center is kaput. Well, we can sell here. Doesn't mean that the price will continue to go down. We can sell here for day trading purposes, swing trading purposes. It's valid. Resistance, resistance, resistance. Common center is kaput. Yes, we can sell. All right, but we can wait again for the monthly candlestick bar, this one to close, and then the following month again. Okay, so beginning of May, we come back again to the daily chart. We want to swing trade again here again. So you draw a channel like this. All right, attention to the median line always. So the median line, you can see the price is turning around near the median line of that channel, or we can wait for it to come out of that channel, which will be a lot of wait for other traders. The price may run fast, a trader may miss opportunity, and I will say, so what? All right. Come out of the channel and retest the edge or retest the median line. And then again, we take it from there. Go to the hourly time frame to sell, or we break it down all the way to the 10-minute time frame. All right. This is just a short video about how to combine the CCI indicator and a different time frame trading method or top-down trading method. CCI is overbought. We acknowledge it. It's well overbought, above 200. We acknowledge. We look at the price. Okay, action. Can we see any weakness? Is there any bearish candlestick pattern? Is there any bearish chart pattern? Right? Do we have a good reason to try to sell this financial instrument? If we see weaknesses, that's a bearish trading setup. Now we go to the signal time frame. We look for the signal. The signal is again another reason on the signal time frame to sell. Is there any valid reason on the signal time frame to sell? What is the best place to sell on the signal time frame? Is there a bearish candlestick bar on a daily chart? Is there a bearish chart pattern? Is there any weakness showing on the signal time frame? If yes, we pinpoint the best place. Okay, here it is. This is a signal to sell right below the trend line on the edge. All right. Now we go to the entry time frame, which is the hourly time frame, and we repeat the same process on the hourly time frame. Can we see a bearish chart pattern? Yes. All right. So to improve our timing on the entry time frame, all right, as I was showing you on the monthly time frame, you can highlight from the daily charts. You can see we highlight the high, the low, and the median line of that candlestick bar that break below the common central line. And on the hourly time frame, here it is. This is the entry point for those who master a top-down trading method. So I understand that a lot of traders do not have the same experience. So for some traders, they may find what I'm talking about here, multiple time frame trading method, top-down trading method, different time frame trading method, a bit difficult. All I will say to you, hold it, all right? You will grow slowly. So keep working on it, all right? Don't just put it aside. Keep working on it. By the time you know, you may master it. If it's not for you, well, it's not for you. All right. So this will help us, okay, by combining the CCI indicator and the top-down trading method. This will help us to avoid the common CCI trading mistakes. Do you think that this video will help you to avoid, okay, CCI trading mistakes when you are day trading and swing trading? Do you think that this video will help you to, okay, to improve your CCI trading as a day trader, a swing trader? All right. Do you think that now that we mention it, that one should combine a top-down trading method with a CCI trading method? Do you think that that will boost your CCI trading? If you say yes, then give us the thumbs up, which means you find this video useful. But if you think that this results are not very short, this is another blah 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 from you, all right, you can let us know by giving us the thumbs down, all right. But if you think that this is a very essential video, all right, feel free to share it on Google Plus, on Twitter, and also on Facebook. We are the TSTW 24 traders talking about how to combine the CCI indicator and top-down trading method like a pro. Happy trading to you all and speak to you soon.